Hello everyone, welcome to Investors Meeting Point. The Indian metal sector witnessed a sharp selling pressure on June 16 as shares of Hindalco, NALCO, and Vedanta Aluminium declined up to 5%. The trigger was sudden correction in global aluminum prices after the United States and Iran reached an interim peace agreement, raising hopes of reopening of Strait of Hormuz. In this video, we will examine why aluminum prices are falling, how it impacts Indian metal companies, and whether long-term investors should view this decline as a risk or an opportunity. Aluminum prices on the London Metal Exchange fell 4.4% to around 3,379 US dollars per ton, the lowest level since late March. During the recent conflict, fears of supply disruptions had pushed aluminum prices to multi-year highs. With geopolitical tensions easing, traders began unwinding the risk premium embedded in metal prices, resulting in a sharp corrections across global aluminum markets. The decline in aluminum prices triggered a sell-off in major Indian aluminum producers. Hindalco fell nearly 4%, while NALCO and Vedanta Aluminium declined close to 5%. The Nifty Metal Index also slipped about 1.5% as investors anticipated lower realizations if aluminum prices remain under pressure. Commodity-linked companies typically experience immediate stock price reactions because their profitability is closely tied to global metal prices. The market is now reassessing earnings expectations for financial year 27 amid changing supply-demand dynamics. Analysts note that Middle Eastern aluminum production, which accounts for roughly 10% of global supply, was severely affected during the conflict. Production reportedly declined by 35% year on year in April. However, with shipping routes expected to normalize, inventories could return to the market. At the same time, China, the world's largest aluminum producer, continues to increase output, while new smelting capacity in Indonesia is expected to add supply over the next few years. These developments could create near-term pressure on aluminum prices despite healthy long-term demand. Despite the recent correction, the long-term outlook for aluminum remains constructive. Demand from electric vehicles, renewable energy projects, transmission infrastructure, solar panels, and data centers continue to grow globally. Industry forecasts suggest aluminum demand could expand by 4 to 5% annually over the next several years. Analysts believe that rising production costs, environmental compliance expenses, and the need for green aluminum production will provide structural support to prices, preventing a return to historical lows below 2,500 per ton. Brokerages continue to maintain positive views on leading Indian aluminum companies despite near-term volatility. Analysts continue to maintain favorable rating on Hindalco and NALCO, citing strong balance sheets, competitive production cost, and long-term demand growth. Investors should closely monitor aluminum prices, Chinese production trends, and the reopening of Hormuz trade routes, and quarterly earnings guidance from these companies before making investment decisions. Thank you for sparing your valuable time in listening to this video. If you like this video, please subscribe, share, and pause your comments. Thank you so much.